So this is a video on how to trade the London free pushes out of the Asian range. So when I say London, I mean GMT plus 0, 7 a.m. till 11 a.m. Now that's when the trade occurs. That's just when it happens. It's New York opens fully at 9. Well, it opens now fully at 8, but after the brinks at 9. So you do 2 hours before, 2 hours after. So you got 5 hours of trading, and that's when this set occurs. In fact, no. I want to change my answer. I've never seen it occur past 10, really. Like honestly, but it can happen between 10 and 11 as well. I've never seen it, but I'll wait for the day. So it normally happens between 7 and 10 a.m. So what you're looking for is, I'll just get a perfect one up for you. On GBP Aussie. So there's certain rules that you need to write down to actually trade this. So first of all, you have to map the levels out on your chart and know where you are in the cycle. So on this, I'll just get it up on the hour so you can see how far back it all goes from there. So I've been doing all the levels from here. And I've stopped doing the numbers because I know what the numbers are. So this is level 1. So it did 1, 2, 3. This for level 1. This is level 2, and this is level 3. So we know that it's in a down cycle, right? So we know it's in a down cycle now. So you're looking for it to go down. So if you're looking for it to go down, it needs to do 3 pushes above Asia to actually enter. Cause what they're trying to do is they're trying to trap the money long, and then they take the short side, then they drop it, they get the money from their position, and how they get their money is they stop the retail trader out, or better yet, they make him add more positions to the wrong way, and he just gets fucked up and loses a bunch of money while the market maker loses loads of money. So some other rules that you need: if it does 4 pushes, you ditch that trade, cut it. If it does 4 pushes and you're like, oh, it ended 4 pushes on a hammer, no, you're looking for 3 pushes. Second is the third push has to be a hammer, a train track, or an evening star. So that means a hammer, or an inverted hammer in this case. Train track, that's a train track. So say it did that up there, that's a train track. Or an evening star. Now you could say this was sort of an evening star. So you could have waited for the evening star, got the 1/3 retracement, and popped 50 fucking pips. Boom, Bob's your uncle. The next rule is you only look for 50 pips. So here, 1/3 will get it up. So if you're looking for a short, you bring it down, the fib. So that's 1/3 of the candle, that's 50% of the candle, that's 100% of the candle. Now, if you go to a shop and you see 30% off, you're going to fucking buy it, aren't you? Like, if you're looking for something and you see a 30% off deal next to say it were retailing at £100, then it was fucking 70 quid next to it, you're not going to buy 100 quid one, are you? Like a dickhead? No. So in the market, you look for deals on your trade as well. So that were a deal. 30% off your trade. Now the next rule is you stop 5 pips above the daily high plus 1 pip for spread. So I normally just do 5 pips to be fair. If it breaks above, you've pretty much fucked anyway. So I want to show you what I mean. So if it breaks above here, it's more than likely going to come to your 5 pip stop. So I have a 5 pip stop most of the time. And yeah, so your stop loss would be, say you got in at the 1/3. Your stop loss would be 17 pips. Stop loss would be there. And you take profit. Remember, you only look for 50 pips. 50 pips, that's it. 50. Boom, you're out. Gone. You're out of the trade. You've took your profit, you're done for the day. Yeah, you come to the charts at 7 a.m. here. You come away from the charts here at 8:30 a.m. An hour and a half done for the day. Yeah. Now, why does this move so quickly down? Like I said, they've trapped retail traders long now. They trap the money, then they go. Yeah. And look at this. They never release those guys. Yeah. They give people the idea that they shouldn't hold on to the position with all this spiking going on, but they never release them. See, there's not a candle that goes to them before it drops. Okay? Just know that. We'll get another one up. So we're on this pair. Let me just check. I don't know if we're on this pair or a different pair, but I do have something to show you. No, we're not on this pair. I think you're on GBP CHF. No, I can't remember what pair it is, but right. So say, oh, in GU. I think it was GU. I think it was GU. I can't remember what fucking pair it was. Can't remember what someone explained. I can't remember what pair it was. Worry. No. No. Right. So anyway, so say you enter this one here, and say you just go sideways for 2 candles. Then it pops up. You watch it on the 1 minute time frame. It pops up, hits above, then comes back to your entry. You get the fuck out, yeah. If it comes up, hits it above, and goes straight to your stop loss, fine, you get stopped out. If it comes up on the 1 minute, comes back down, you get out at the 50% retracement line. So you lose 2 pips. And 80% of the time, yeah, on the 1 minute time frame, if it breaks the 3 pushes, and it's a strong 3 push as well on the 1 minute time frame, and it comes back to the entry, then it goes straight back up and hits the stops. They're trying to make you emotional. That's what they're trying to do. But 80% of the time, if you're on the 1 minute time frame, when you're in the trade, you watch the 1 minute time frame. Okay? There's other rules as well. Just write these rules down, what I'm saying. Right? If you want to trade this way. So it breaks it on the 1 minute time frame. It goes a pip or 2 above, and then it comes back down to your entry. Get the fuck out, right? Because that's then 4 pushes. It's more than likely going to just fucking stop you out anyway. And if it does the 50 pips, hey fucking ho, you got out, you broke even, you lost 2 pips. Next day, next trade, you're getting a good trade. The market will always be there tomorrow, people. Just remember that. Say you wake up late for whatever reason. Like last week, my fucking alarm didn't go off. I missed a trade. Hey, this is hypothetical. I didn't miss a trade, but I did wake up late 'cause my alarm didn't go off on my phone for some reason. But yeah, say you missed a trade and you aren't at the charts for whatever reason, fine. There's another rule. This is another rule, guys. If it goes, so yeah, that's the candle finish. If 8 candles go by and you're on up big, at big I mean 20 pips. If you're on up 15, 20 pips, you get the fuck out of that trade. You cancel it. 2 hours in, that's 8 15-minute candles, get out. And I mean on the 2 hour mark. I don't mean at 1 hour and 57 minutes. I don't mean at 2 hours and fucking 15 seconds. I mean when that 8th candle closes, you get the fuck out. You're watching it, you're hovering over your position. Once the 8th candle closes, so X your position. Click that mouse faster than you can ever do it. Yeah? Don't do it 50 seconds before, a minute before. 2 hours and get the fuck out. Yeah, can you hear me spamming? That's what you need to do. Get out. So if you're 10 pips up, 5 pips up, yeah. But if you're 20 pips up, 25 pips up, 30 pips up, move your stop to break even after 2 hours. And if at 1 p.m, well, no, if at 2 p.m. it hasn't hit your take profit, get out. That's start New York. It will more than likely reverse into your fucking stop. Okay? Now, the next rule is, I've already spoke about this retracement. You've got, if it doesn't do the 1/3 pullback in 3 candles, that fucking trade's done. Yeah, it'll more than likely do the 1/3 retracement on the next candle, but if it takes 2 candles, 3 candles, it does the 1/3 retrace, you're all Gucci. But if it does it on the 4th candle, you don't enter. They've got something else in mind. They want something else to happen. They want to go up. Or, well, they want to go up in this case. So if you haven't got all these rules, yeah, I'm going to go through them again. You're looking for 3 pushes, 3 candles. You don't want 2 candles, you don't want 4 candles, you don't want 5 candles, you want 3 candles. Has to finish on a hammer, train track, evening/morning star. Can also, and it, oh guys, this makes me wet. If it does if it does it's my wet dream. This, it happens all the time though. So if it does 3 pushes to the daily low or to an EMA and offers the hammer or the fucking train track, you know you're getting paid that day. Yeah, you know for definite you are getting paid. If it does, say it did 1 push, 2 push, 3 push, hammer off the daily low, it's in an up cycle in this case, but it's in a down cycle. If it does it to the daily low on a up cycle, 3 candles, 3 pushes, train tracks it or hammers it, get fucking ready. You're getting paid. 95% of the time it does that, it will pay you. 50 pips, not 51 pips, not 52, not 49, not 48, 50 pips. And notice when it gets to the 45 pip area, when you're in one of these trades. Wait, can you go that far back on the 1 minute time frame? Yeah, you will be able to. Oh, that's Monday. This happened on Tuesday. Right, notice when it right, so you entered here. 1/3 retrace. 50 pips, yeah. Notice when you get to near the 50 pip mark, it's going to start throwing it up and down, up and down, up and down, then it'll hit the 50 pips. Why? Because they're trying to make you take that off with 45 pips, 44 pips, and the balance in the books for the people that are taking it from the 50% retracement. If it does a 50% retracement, they got 45 pips at the bottom there, and you got to mind your spread as well, people. Yeah, they're trying to make you get out. When it gets to the 45 pip area, you'll notice it go from 40 to 45, 40, and then it'll just bang 50. Look like here, 40, 45, 40, 45, 40, 45, bang 50. Yeah. Right, next rule, you wait for that 1/3 retracement. If the candle is above 50%, no, if the candle is above 20%, just something I saw on my desk, on one of my pages on my books. Anyway, one of my mates put Lewis was here. Right. Lost my train of thought even. Right. If the candle is above 20% of the pips that a pair does in a day, so right, let me give you an example. This pair moves 150 pips in a day. 20% of that is 30 pips. So if this candle was a 35 pip candle, you'd wait for a 50% pullback. But because it's below 20% of the days of the ADR of it, you go for 1/3. I will be one moment, because my nose just got blocked up because hay fever's a bitch. fuck cancer fever, am I right? Right. Next rule. If 4 push on the 1 min, so say this went here and then it did a 1 minute on the 1 minute time frame, it went like this and it came back down. So then it'd be 4 pushes, 4 candles. You get the fuck out at break even. After 2 hours, get out if you're not up big. If up big, put stop loss at break even. Only trade in line with the cycle. You're only looking for 50 pips, people. You're not looking, like I said, you're not looking for 51, 52, 49, 48. You're looking for 50. So if you get on, right. If you get on bang on, right, you go on the 1 minute time frame. Or 15 minute, I don't give a shit what time frame you're on really. You come to the area. Your entry is bang on this yellow 1/3 retracement to the pip. Now I always mark execute it like a bit below, yeah. Then you're all good. Say you're getting a pip away from the 1/3, you want to go for 49 pips. So you put it on it like that 20%. You put it on it like that. You put your mark. You can't see that yellow line. You're bang on the yellow line or whatever fucking colour it is. Blue, purple, fucking multicoloured. I don't give a shit. Yeah. 50 pips. And then you put your take profit there. Bang on 50. It's easier to do when you're in your position because you can move it slower. But like I said, you don't want 49, you don't want 48, you don't want 51, 52, 53. This is a rule as well, separate rule. Don't think you can go for 100 pips or 120 or 70. Don't, just 50, right? Stop loss is 5 pips above the daily high or low. And you need 3 candles to enter. Not 4, not 2, not 1, 3. Yeah? 3. And they're the rules. I hope everyone got the rules. Write them down, stick to it. Go back in the chart, mark the charts up, get your levels up, and see when it did it. See what happened. See when they tried tricking people into it. They will try to trick you into it sometimes. Like, look. Wait, no. They'll try to trick you into it. Just trust me. They'll try to trick you into it. And they'll try and make you emotional in these trades. Once you've been trading these trades for a while, you'll see what I mean. They'll try and make you emotional and they'll try to trick you into the trade. Because they know that we're smart, but they can still use our emotions to get the best of us. And that's why you just need to be unemotional when you're trading. That's why I use a set of rules and you stick to them. Goodbye. Have a good day.